This will be the next $3 trillion company, and it's all thanks to generative AI. Now, I've stated there is only one company to really watch in 2023 if you want to know where the markets are heading, and that's Microsoft. The tech mega cap accounts for 6.78% of the S&P 500. It makes up 6.5% of the Dow Jones Industrial Average. So it's the second largest component of both of those indexes. But on top of that, it is the largest component of the NASDAQ 100, currently representing 12.8% of its weight. Now, to take a step further, Microsoft is smack dab in the center of 2023's hottest trend, artificial intelligence, AI. The company began investing in OpenAI all the way back in 2019, but hey, no one gave two shakes about it then, not until OpenAI released ChatGPT last November. So Microsoft's stake in this AI startup is now $13 billion. And Microsoft has added AI to all of its products. We all know. We all know that Copilot and everything's there. Now you can access AI through any of its products, Word, Excel, Outlook, Copilot is everywhere. But most important of all is that this is rolled into Azure. Now, most everyone I know operating in the tech space is tapping AI specifically through Azure because it can easily spit out any sort of front ends or coding that they need. Morgan Stanley sees this dominance from Microsoft providing significant upside for the company, and that it has the potential to be a $90 billion incremental opportunity for Microsoft by its fiscal year 2025. Okay, so for reference, we're currently coming to the end of its fiscal year 2023. So we're just talking a little bit more than 2 years from now. So Morgan Stanley now has a $415 price target on Microsoft shares. They're currently trading roughly around $337. So that's an upside of 23% and would take the company into the $3 trillion market cap club, which right now only has one member, Apple. So what I'm getting at is where Microsoft goes, so goes the rest of the market. All right. Year to date, shares of Microsoft are roughly 41%. That's outperforming every single index, including the NASDAQ 100 proxy, the QQQ or the Qs. And if you want to know where the market is heading next, well, then we need to know where Microsoft is heading next. Fortunately, July is traditionally a very solid month for Microsoft shares. We can see from this chart right here that over the past 5 years, they've gained an average of 4.79% in the month. That makes it the second best month of the year for shares. The only month that is better is April. Now, we are approaching the company's Q4 report near the end of July. I want to take a look at my Vert EA strategy, which I've talked about in the past. This is all looking about how shares of companies move on specific earnings reports. And what we see from Vert EA is that Microsoft shares have experienced a mixed bag in terms of reaction to this report over the last several years. On average, the one-day move on Q4 from Microsoft has been minus 0.72% since 2011. But when we focus near term, in recent years, we see that the response has been much better. And we've had 4 moves higher on the last 7 Q4 reports. And last year's Q4 reaction was the strongest in over a decade, gaining 6.69% in one single day. All right, and that's kind of all thanks to this sort of AI trend. So these are positive. I'd also like to point out that historically, as quantitative specialist Chris Johnson pointed out to me earlier this morning, Microsoft has also averaged a 3.4% gain in the 2 weeks following earnings. So this means that if we want to know where the market is heading, and we know that Microsoft is in a very bullish phase right now, then this is a great opportunity for the market. It is also a great opportunity for Microsoft to buy right around these levels with that upside to $415. All right, I'm Matthew Carr, editor-in-chief of Money Morning. Be sure to like, subscribe, and turn on notifications so you never miss out on any of the vital investing information that from myself or any of the strategists that we share here. Until next time.